to Fulfillment Key. As always, hope you guys like this video, and today we're going to be talking about the Blackrock Science Trust and Technology Trust. Both of them, there's two trusts, the Science and Technology Trust 1 and Trust 2. As always, make sure to subscribe so you're notified for new videos when we come out with new funds. And let's get straight into it. So today we're talking about, like I said, Blackrock Science and Technology, the two funds that yield together 10% monthly dividends with a lot of tech growth. Now, allow me to go through the first fund, which is BSTZ, and the reason that I'm covering this fund is because it gives an extremely high dividend yield while also having a lot of upside. Now, normally in the closed-end fund market, we see that funds generally perform about 3 to 4% a year, while also returning distributions of 8 to about 10% a year. However, these funds have been pretty consistent in terms of delivering between 10 to 20% returns since inception, including the dividends, but without the dividends, about 10% a year. And it's very interesting because they mirror the returns of the growth stocks and the positions that they hold, but at the same time, they're able to provide a dividend where they don't use return of capital, which essentially means they don't use leverage and they don't return your own money back to you. And they're able to return long-term capital gains to you, which is also potentially, I'm not a tax accountant, but potentially a tax benefit. Now, the thing to keep in mind about these funds is that they're both relatively new. They were released within the last 2 years, but the dividends have consistently been increasing since their inception, which is always a good thing to see with a fund. At the moment, BSTZ is about down 50% from its all-time high, which lets you know that if the market is to recover, we're about to get back 50% to all-time highs, and it's trading at a 13% discount to net asset value. Now, what that means for those of you that are not familiar with the lingo, the actual assets that it holds, it's about 13%. Basically, the assets, you can buy them at a discount of 13% from what they actually are, which is actually pretty nice. A lot of funds tend to trade at a discount. Always, a lot of funds tend to trade in like at a premium, but it's always nice to know that you're buying assets for less than what they actually are. Versus like CLM, what we talked about in the last video, which you're buying them at a premium generally. So, and the last thing about BSTZ is that you get exposure to a lot of new innovative companies. This is a good and a bad thing. Like 30% of the fund is invested in private companies, which a lot of them are projects, innovation projects, whether it's like AI and different kinds of things. So BSTZ is definitely focused more on the growth and innovation side. Not to say that BST isn't, but BST is more on the bigger market caps, which we're going to take a look at right now. So the first thing I wanted to cover is also to show you the returns, of course, over the last, let's say, since the 2 years for BSTZ and 5 to 6 years for BST. And we could see that if you had bought BST in 2016 and you did not reinvest the dividends, you would take $10,000 and turn it into $29,000, and that's over a period of 6 years, which is actually very amazing. That's about 20% a year, not including the dividends that you'd be collecting from the fund. Now, BSTZ is lacking a little bit behind. We got about 9% a year, but of course, that's not including the dividends, which right now is 11%. So if you really are to combine that 11% with the 9% a year, you're at about 20% a year. And I think that both of these funds are like amazing buy at the moment, and I'm waiting for them to go down a little bit more because I'd like them to mirror some of the other funds I'm looking at, such as CHW, which I'll go over at another time. But just keep BST and BSTZ in mind. And now I'm going to cover the difference between the two funds, which I have already gone over, but I'm going to say it again. So BST, like I said, has a lot of bigger companies in its holdings. BSTZ has a lot of more newer innovation companies, private companies. It has about 30% of the companies focused on there as private companies. So they're companies that are not traded on the stock exchange, that they're privately invested in. BST has a lower yield of about 8.8%, whereas BSTZ has a yield of 11.2%. Both of them pay the distributions in a similar way. It's just that BSTZ has a higher yield and it has a lot of more downside because it's smaller market cap versus larger market cap. They both pay monthly, but personally, I would concentrate more on BST just because I understand the companies that it's in. And looking at the potential upsides, not including the dividends, BST is at about 37% upside, and BSTZ is at a 50% upside to all-time high. So what do these funds do? How are they able to pay this? That's a question we should be asking, and I've gone over these funds before on the channel, and now I'm saying it again. But it is a perpetual closed-end equity fund. Basically, they look to give you returns through, current income, current gains, and long-term capital appreciation, and they invest in different kinds of tech companies. For example, they detail it as saying selected for their rapid and sustainable growth potential from the development, advancement, and use of science and or technology. A lot of this jargon, but what they're really trying to say is that they're looking at, a lot of science and tech companies that are able to generate a higher dividend yield or give them more capital gains that they can return to their investors. And they also use about 20% of their portfolio on writing and selling covered call options in order to juice up the returns even more. But let's, that's that. Let's go over the holdings of BST, and then we're going to look at the holdings of BSTZ. So right off the bat, you can already tell a lot of these companies, if I don't know if you work in tech or if you work in a normal, but you've heard of most of them. You got Alphabet, Facebook, Kakao, Snapchat, Tencent, Yandex, which is like a Russian company, ZoomInfo, which is a newer company that people are investing in. It's interesting. But MongoDB, Okta, PayPal, Shopify, Square. When you swipe your card, you go around. Twilio, Visa. You got Lyft and Uber, and you got like Marvel Technology. I'm actually not sure what that one is, but Advanced Micro Devices, Qualcomm, and a lot of other companies, and Adobe, C3 AI, Atlassian, Autodesk, and a lot of these companies are stuff, like I said, that are really large market cap. And then you have BSTZ, which is going to be companies that are on the smaller market cap. Now BSTZ does include Tesla, which I find very interesting. I don't know what the reasoning is behind that, because their goal is to invest more in private projects, but I guess maybe it's some kind of hedge because it is a bigger market cap. But a lot of these companies I haven't heard of, like Wolfspeed, Endava, Lasertech, Project Kafka. So apologies there. And the breakdown of this is by country is 44% in the US, and you've got other countries for other exposure. And I assume that a lot of those, up and coming companies that they invest in are based in other, different kind of emerging markets. Regardless, both of these funds don't use leverage or return of capital. So I find that, relatively interesting, and also, kind of a breather to know that the fund's not going to collapse at some point because of their high use of leverage, or that they're invested in the wrong things. But regardless, let's look at BST's latest distribution, which was 25 cents. Now, the interesting thing about BST and BSTZ is that they have a special distribution that they've done the last 2 years, which is every December over the last 2 years, they gave like $1.27 on top of their normal distribution. So they gave 25 cents for every share that you have, and then towards the end, for every share that you had, you would get $1.27 at the end of the year on December, which is interesting. I hope they do it again, but I know that was probably something really awesome for the investors that looked in their brokerage and saw just a ginormous dividend. But regardless, here's my personal holding in BSTZ. As always, I like to share that with you guys so you guys know that I'm not, just blindly putting this information out there and letting you guys know what I'm doing in terms of this. So right now I'm in the accumulation stage. I'm trying to accumulate more BSTZ as a play. I have about $6,000 in it. It's about 0.9% of the portfolio, and it's yielding about $50 a month. So on average, that's about a 10% yield that you're looking at, but you've also got that 50% upside. Regardless, I hope you guys liked this video. A lot of it was just me going on and on and on, but putting this stuff together and doing some research takes a decent amount of time. So if you guys do like the video, make sure to like, comment any questions you guys have. I'm always happy to answer, and subscribe for more videos. Thank you guys so much for watching, and see you in the next one.